How's it going, everyone? Welcome back to another Bitcoin update. And as we can see on the weekly time frame, a move is starting, pumping towards the weekly moving averages. We have to understand that these are upcoming resistances, and let's scale into the lower time frames to see if this is actually technically correct. We want to see further confluence on other time frames, not only just the weekly. So we'll go ahead and do that today. Make sure to support the channel if you can, like, subscribe, comment, as we are on the road to 10k. If you ever want further education, use the links down below. Let's dive into this video update and head over into the daily time frame. We saw on the weekly that there was some resistance around 90,000, and once again on the daily time frame we see the exact same thing. In fact, over the past couple of weeks I've been suggesting that a move that recovers the 200 EMA is going to start a further move back up into around 89 to 90,000. So that is my expectation. I did draw over some levels in my past updates. When Bitcoin was getting a move down into this green box, it was one of the last levels of support. So I was saying a bounce can start from here, and that bounce must recover the 200. We can see in those two candles the bounce and the recovery, but it ended up being a fake out. So you can see that it found support on my Fibonacci. If you want to learn the fibs, use the links down below. But you can see, even if you just spend some time watching my videos over and over, you would definitely get the gist of it. Maybe placing it is the tough task, but in the end 382 held, 0.5 broke, 0.5 was also in line with the 200 EMA and the 20. There was a death cross, which is actually a very negative signal. Of course, what's going on right now is it's trying to invalidate that and form another golden cross or bullish cross. So bearish cross, meaning price should continue down lower. The 382 being a very key Fibonacci maintained. It gives it one last opportunity to take this out. Highly likely that it actually lower highs exactly over here since the bearish cross, and it's another Fibonacci level to actually continue lower just like that. The strength on Sunday pushed price through, but of course this creates a CME gap that everyone needs to be aware of slightly underneath. So this could mean that eventually we come down and fill it. What could that mean? A move back up into 89, 90, and maybe back down is a possibility. Let me find that chart for you. So yeah, at least for now, with the recovery of the 0.5 and the 200 EMA, 85.5k, going forward, this must maintain. You can actually see already with today's candle, the opening actually attempting to lose the 85.8k level, 5k level, and it was maintained, giving this pump once again. So we are already showing signs on the daily time frame that 85.5k and the 200 EMA has been recovered and is support once again. So my expectation, like the last couple of weeks, is that a recovery of the 200 EMA will start this move up into the next set of moving averages. And it's not on this chart, but I did previously have a falling wedge pattern in this on this chart, and the target being 95 to 100k, these two highs. So no expectation beyond that point. And unfortunately, while Bitcoin stays beneath 105k, the chart is technically bearish. Bitcoin could pump up as high as that and still head into new lows. I've shared previous examples in the past over here. It looks like you got this completed dump. It just pumps, and before breaking that high, it rejects the 886 and heads into a new low. And this actually happened a good few times over here, hit the 886 and went to a new low. So that could actually still happen. That's going to be in the back of my mind. While under 105k, technically speaking, the probabilities of a downside path are still there and quite high. Once that's broken, it's completely out the window. There's nothing to be bearish about. All the bearish cases are getting invalid one by one. A very good first step would be to recover all sets of moving averages, but this is just a very first step. Ultimately, that is the level that needs reclaiming. And until then, there is the risk that a move up into 87 to 90k could just be another lower high, continuing the trend that we keep seeing, which is each high is lower than the last. So with 90k to 92k being the last high, and also a more micro Fibonacci golden ratio 786, 886, we know that it could just be pumping into that and heading into new lows. Now, I'm not guaranteeing new lows will come, but definitely these are rollover locations where price can, of course, weaken once again, and bears can take over, pushing price down, at least in the short term. Who knows if it will make a long-term like a sustained move to the downside. We don't know that, but the risk that can happen is very high while under these resistances. We've got a bearish cross, so technically this should be the top of the downtrend, and then continuation. That is what has happened the last few times and went lower. So what we're trying to find are characteristics that differentiate from the past to start a sustained move back up. So what we need to see is this area 83.4 to 85.5 maintaining as resistance. Even if there is a rejection from here, it needs to bounce once again and break through. This can start a journey, and once 90 to 92 is flipped into support, there is that expected move up higher into 101 and 105k. But remember, till that moment it's broken and flipped into support, you can dump from here into new lows, from here into new lows, from current price into new lows, all the way up there into new lows. This is what the Fibonacci's are actually entailing. That's what they're suggesting to us. That is the rules of them. So I will be here to update it day by day as it develops. But for now, my expectation is with the recovery of 85.5k that this area must maintain, and we should actually see continuation higher. The target is 89 to 90k. 87 to 88 is what's standing in the way. A rejection from here today, I'll just say tomorrow and the following days and this week, it must maintain this lower end, and it should eventually push through 87, 88 and target 89, 90. The unfortunate truth is that with the last high being at 91 to 92, then this high should be, of course, lower. The moving averages are lower, so that makes sense for it to be the highest point of this downtrend. That is what the definitions are suggesting anyways, guys. These are not my what I want. This is just I'm just explaining the rules and the expectations we should have by following the rules. And that is suggesting with a bearish cross that this is the current resistance, this is the current top of the trend. And so by breaking this, it's a very good step in the right direction for flipping the market bullish, for giving alts a sustained move back up. But I'm personally not going to take any interest on alts until I see Bitcoin totally safe. I don't want to get scammed and tricked by them. So I'm going to be DCAing as I have been all the way down, and I will be all the way back up. Regardless of price, Bitcoin is what I'll be DCAing, and I need to be heavily convinced that it's totally fine. And expectation is uptrend over the coming month or so. And then that's when I can scale into altcoins with a low percentage and just trade them rather than invest and holding them. Guys, if you want to get educated, if you want to learn how to use the fibs, place them like me, understand the expectations set by breaking or holding certain levels, check out my ebook, mentorship, or Discord community. I host weekly workshops in the Discord, so I mentor you all live. Use the links down below. I'll catch you over there. Support the channel anyways. Like, comment, subscribe, turn on that notification bell as the videos just come out randomly, and I'll see you over in the community. Cheers.